Hello everyone, and welcome to another episode of the Daily Gwei Refuel, where I recap the latest news in the Ethereum ecosystem. I'm your host, Anthony Sassano, and today is the 11th of January 2021. Alright everyone, a bit of volatility in the markets overnight. I'm sure you all felt it. I think it's been going on for the last 24 hours or so. It's a pretty brutal drawdown. You can see here on the chart, this is the daily chart, how much of a kind of drawdown it's been since, ETH was about 1350, went down to 1,000, which is about a 35% drop, if I was to say, if I'm doing my math correctly here. If I look at it here, no, I was doing my math incorrectly. Sorry, 25%. So yeah, pretty brutal drop there after going up for a period of, quite a while. You can see here we went up pretty quickly, and then, topped that around 1350 and all-time highs around 1420. So unfortunately, I won't be tweeting again anytime soon, it looks like. I spoke about that the other day, how I made this promise where I wouldn't tweet again until ETH was at all-time high. I of course expected ETH to go to all-time high around here, because it was already at 1300 when I tweeted that, and I was like, 1420 isn't very far away. But alas, the markets are a cruel beast, and they will, punish you when you least expect it. So yeah, I didn't expect a dump this big, but I'm no trader. I don't actively trade any of these markets. So, I think that's a good thing, because I'm not very good at calling, tops or bottoms on these sorts of things. But in general, if you're looking at this and thinking, is the bull market over? Is it all going to crash again? Are we kind of like at the end of 2017, early 2018 in the cycle? I don't think so. I think this was just like the flush out that we needed. You can see, how long we went up for without a proper flush out. We did have some dumps here. You can see on the candles here, the wicks go down pretty badly, but it wasn't anything, too serious, because it got bought back up straight away on the daily candle. Whereas this seems to be a pretty brutal dump, and it doesn't seem to have ended yet. As I'm recording, it's still going down, so we'll see how that goes. But I don't want to focus too much on the price here. Just wanted to point that out for those who might be worrying or might be feeling a bit disheartened. I think, you can get addicted to the gains, right? You can get addicted to how fast you're going up, and it kind of becomes euphoric. And then when you go down, it's like, go down very fast. It can become pretty depressing. But, you look here, we're basically back at the price we were at on the 5th of January. That's like basically not even a week ago. So, crypto prices can move fast in either direction. And I think that's always important to remember. And Larry Sturmak from the blog put out a tweet the other day basically saying, Ethereum has a bunch of different all-time highs on different exchanges. You can see here that Kraken actually recorded its all-time high at about 1595, which is quite a lot higher than the rest of them. The rest of them seem to be between 1420 and 1440. For the sake of my tweet, and the all-time high that I've been going off in general is 1420. That's from Coinbase, Bitstamp, and Gemini. Bittrex and Huobi, Polynex, Bitfinex, they're all around that, right? 1424 here. Binance was 1440, but I think 1420 is the all-time high that everyone seems to have agreed upon, or at least most people have from what I've seen. So, hopefully we get up to that. I don't even mind if we go there and then crash off that. I just want my tweeting ability back. I think, some of you might have seen on Twitter today all the memes and everything. I'm enjoying it. It's quite fun to see all that. But as a passive kind of viewer, it's quite funny. You get people messaging me, asking me how I'm going and stuff like that. Obviously I'm fine. It's not a huge deal. It's just funny seeing all the memes. So keep the memes coming for sure. And for people who say that I'm cheating by retweeting things, I'm not cheating. I retweet things because they're funny, or because I want to update my followers on what's going on, or I'm excited about something. And I also use it as reminders for what to talk about with all of you. I usually talk about what I've retweeted on the Daily Gwei Refuel. So yeah, I don't think that's cheating. Tweeting and retweeting are a bit different, I think. So yeah, we'll see how we go over the next few days with regards to price. I do think that, we might see another kind of dump down just to basically reset the market and then continue up from there. But as I said, I'm not like a trader or anything like that. I'm just following on kind of what I've seen, how I've experienced like previous bull markets, And this is basically normal. Previous bull markets, I mean, in 2017, you had 35 to 40% drawdowns, I think 6 or 7 times during that year for BTC specifically. So this isn't out of the ordinary. This isn't something that hasn't happened before. So yeah, always be kind of like ready for this sort of stuff. And it can basically snap back as fast as it goes down. Like, you know, we could be at 1300 by tomorrow, for example. I'm not saying it's going to happen. It's probably unlikely that it will happen. But, you know, that's how fast crypto moves. And I'm sure a lot of you who have been in the industry for quite a while will be well aware of that. But for newer people, this is literally normal. This is nothing out of the ordinary. And a 25% dump's actually not that bad compared to, you know, what we've seen in the past. So yeah, just keep that in mind. So Into the Block put out an interesting tweet just before about addresses that are currently in profit across different blockchains. So what I actually found quite funny was that there are more addresses in profit on ETH than in Bitcoin right now. And this is simply because Bitcoin basically went to what, $42,000? If I'm looking at the chart right now, it's back at $34,000 now. So you can imagine how many people bought BTC between 34,000 and 42,000 because it actually hung around there for a little bit. And basically are now underwater on those purchases, right? If they didn't, of course, obviously if they didn't sell. Whereas for ETH, I imagine, you know, we didn't stay at the price levels that we were at for too long, and we kind of like dumped down from there. So, you know, you can see that basically 92% of all people that bought ETH are in the money, so they're in profit. And then you can see the other blockchains here. You know, most of them seem to be like highly in the money. What actually struck me as a bit of an outlier was Bitcoin Cash here, but then I thought about it and I'm like, you know, there's probably a lot of Bitcoin Cash that isn't actually or hasn't actually been claimed yet. So all the addresses where the Bitcoin Cash is sitting, or at least most of them, people didn't even bother to claim it. So it's just sitting there. So it hasn't moved at all. So it's sat there since the airdrop, essentially, or basically since the fork, in 2017. So that makes sense. And then VET here, which is VE Chain, also stood out to me, being 90% in profit. I mean, I don't know much about this project at all. I do know that it was a big project during 2017. So it's interesting that it's still 90% of addresses are in profit, even though it was one of the bigger, I think, pumps and then later dumps in 2017. Not to say that the project is a pump and dump, but it definitely went up pretty highly and down, I guess, from there. So that was interesting to see. But this is one metric I love to look at. I believe that, you know, if most of the addresses are in profit, then, you know, the selling pressure will be less, simply because people are less inclined to sell when they're in profits, right? If you're losing money and it keeps going down, eventually you get to a point where you're like, oh well, I better sell, right? Cut my losses. But if you're in the money, you know, you kind of get, you know, I mean, everyone does it, right? You get a little bit greedy. You think, you know, I'll just wait for it to go a bit higher, because I'm in profit. It's all profit at this point. You know, you might take off the table your original investment. You might take some profits, but most of it you let ride. You know, I have some friends doing that. They take 5 to 10% of profits around these prices, and then they let the rest ride because up to a certain price point, because they, you know, it's pure profit from that point of view. So this is something that I like to watch to see, you know, which kind of coins are going to have, you know, extreme selling pressure as we move up. Which coins won't. You know, generally something that where most people are out of the money. I think it will sit in what's called a accumulation phase for a while. And we saw this with, I guess, ETH for 2 years, right? When ETH basically sat between $1 and $300 for 2 years. Most of the time it oscillated around, I think, $150 and $250. And that means it was basically in an accumulation / distribution phase where people that thought it was the bottom, and it kind of was because it was like a massive range, they were accumulating, right? They were buying, but they weren't in profit yet, right? So they were still counted as addresses not in profit. But at all that time, you know, people were capitulating, were selling, you know, they're getting out of the markets because they're like, I'm going to cut my losses. This thing's never recovering. And that's why we get those long phases where you have that 2 year, maybe even a 3 year accumulation phase. And then from then on, all the people that the kind of metric says aren't in profit, right, or are underwater, they are not people who bought at $1,000 anymore, right? They become people who bought at like $200. So they are immediately in profit when the price goes back up. So this is why this is one metric that I really love to look at to see that. And there's a bunch of others you can look at as well, but This is great for spotting when something's been in accumulation for quite a while, and eventually it will go back up. So yeah, I think you have to pay to access this maybe, but it's on Into the Blocks website. You can go check it out. I'll link it in the YouTube description, of course. But yeah, I think it is paid, but yeah, you can go check it out and pay for it if you so wish. Interesting tweet from Mark Zeller here, just before actually. He was replying to someone who said that they sold their lend after ICO for a mere 3 times when they could have made it 600 times. And then Mark was basically saying, we will always welcome you back to the Aave fam. They still have a lot to build. 2020 was the tutorial. The real deal starts now, and I'm looking at the future with a lot of optimism, he says. So obviously he's referencing optimism as in the optimistic rollup company. So the company building this scaling technology that you've probably heard about. Synthetics is going to be using them. Uniswap is going to be using them. Even Chainlink, I think, as well, is going to be using them from the teasers that I've seen. And everyone was wondering, what layer 2 is Aave going to use? Will they use Optimism? Will they use ZK rollups? Will they use a side chain? What are they using? And I honestly haven't heard much about this at this point. So this is why this tweet kind of struck my curiosity, because he said Optimism. Now, Mark is part of the product team, I think, or at least the core team at Aave. So this is not some random saying this, but he might be trolling, right? He might be trying to do some misdirection here, but I don't think so. I think it makes sense for Aave to be on Optimism with other protocols like Synthetics, from a pure, composability and liquidity standpoint. And I wouldn't be surprised at all if they actually ended up being on Optimism. I guess we'll find out soon, because of the fact that Optimism's soft mainnet is launching on January 15th with Synthetics, so it's only 4 days away. I'm sure once that goes off without a hitch, or once that's out there, they're going to want to hype up the next projects that are going live. And, as I said, Uniswap's already been announced because their logo is basically on Optimism's blog posts, same with Chainlink. I think Aave is probably the next one. So, yeah. Great to see Mark put this out there as a little bit of a teaser. I hope he's not trolling, because I would really love to see Aave on Optimism. I think it makes a lot of sense. I think, layer 2 is just going to keep getting hotter and hotter this year, as I've said many times. And, I'm very much looking forward to January 15th to seeing how the soft mainnet launch for Optimism goes with Synthetics. So, yeah, really looking forward to that. So dYdX crossed a huge milestone over the weekend. So they did they've done a cumulative $3 billion in transaction volume on dYdX since launch. And they're saying they're just getting started with layer 2 coming soon. Now, for those who don't know, dYdX is launching a layer 2 using Starkware's ZK rollup technology. So not Optimism. So yeah, as I've noted before, there are 2 leading kind of technologies right now, and kind of companies leading it here, with ZK rollups and optimistic rollups, and there's a few key differences between those, and we don't know who the quote-unquote winner is going to be yet. We just know that those are the leading technologies, and they are getting a lot of traction. There's big DeFi projects that are looking at them. So yeah, we're going to see that come to fruition here. And Starkware quote tweeted this and said that basically dYdX's perpetual contracts will be live on the StarkX ZK rollup engine on Ethereum mainnet in a few short weeks. So this is all coming very, very quickly. I feel, we're going to get Synthetics on January 15th with Optimism. We'll get, within the next 2 to 3 months, we're going to get, I think, Synthetics on mainnet Optimism. We're going to get dYdX on ZK rollups. We're going to see the continued growth of Loopring's ZK rollup technology as well, along with Diversify. Curve is on ZK Sync, which is from the Matter Labs. We're going to see a Uniswap layer 2 go live, which I think is going to completely change the game and basically give a lot of people their first taste of layer 2. So there's just, within the next 2 to 3 months, it's just going to be layer 2 pretty much every week, I think, of new projects going there. We're going to see incredible adoption across the board here, because the gas fees have gotten to the point where, a lot of people are just so sick of it, right? Every time the price moves, the gas fees spike up. Today, or during this kind of dump, the gas fee spiked up to 600 Gwei again. And for those wondering why this actually happens, there's a few reasons. So The number one reason is because the bots working on chain to arbitrage between different liquidity pools on chain. So, say Uniswap's liquidity pools, Sushi Swaps, Curves, all these sorts of things. The bots don't care how much they pay in fees as long as they're making a profit. So what they'll do is they'll do an arbitrage between multiple kind of areas. Maybe they'll even use Aave for flash loans, whatever. But all they care about is that they make profit net of fees. So they will pay 99.99% of the transaction in fees as long as they make 0.01% profit. So they don't give a damn how high the gas fees are. They will pay that as long as they know that they're going to make a profit at the other end, which they do in terms of times of high volatility, because the arbitrage opportunities are so great, because the prices get so far away from one another. And the second reason is that people who have on-chain leverage positions open are scrambling to close those. You can imagine that you're seeing the price fall from 1,300 on ETH to 1,100, and you have a position that's going to get liquidated at $1,050, right? You're scrambling to cover that position. So you're paying down your loan with freshly purchased capital, such as like stable coins, or you're closing out your position by selling off your other assets as fast as you can and getting the money into Aave or whatever, or Compound, and paying down your debt. So that's the second reason that it happens. And third reason, and that's a bit more technical, is that, and I'm not sure how much of an impact this has, but I think it does have actually quite a large impact, is front running. Front running bots and MEV in general. So basically bots that try to front run other bots or people's transactions to basically do their transaction before they can do it, to make the profit. So that's another thing there. And they obviously will bid higher than the person they're trying to front run in terms of gas fees to get their transaction included first. MEV, minor extractable value, falls into that. Basically trying to outrun the other transactions. And for those who maybe don't know how this works, basically when you submit a transaction to the Ethereum mempool, depending on the gas fee that you paid, you can get the transaction confirmed within one block or multiple blocks. So if you're doing it within one block, it's 15 seconds. So all the transactions that have paid the right fee that are included that in that 15 seconds will get included in a block. But during those 15 seconds, pretty much everyone can see those transactions, and if someone wants to, they can front run it. Now, what that means is that, say you have a transaction, an arbitrage from Uniswap to Sushi Swap, where you're going to make $100 in profit, as an example, right? A front running bot can see that and say, okay, well, this is going to make $100 in profit for this person. I want that profit. Okay, well, this person paid this much of a fee. I'm going to pay more than them to guarantee that my transaction actually gets included before theirs. So I actually, they're not stealing anything, but they're basically, copying that transaction and taking away the opportunity for that original person to profit from it, or bot or whatever. A lot of this activity is actually automated. So that person or bot has actually taken that opportunity away from the original owner, and that's called minor extractable value. And that is actually something that happens a lot. You don't see it. This is what people talk about when they talk about the dark forest of the mempool. You've probably seen the blog posts written about this at this point. There's been a few of them. And this is like an active research topic for some very smart people right now. They're researching on how to basically stop this from happening, or at least have it happen where it's fair for everyone. But yeah, I'm not going to dive too deep into that. But that's another reason why, or at least one of the big reasons why, the gas fees can spike so high. Because, as I said, as long as you come out with profit at the other end, people don't care how much in fees they have to pay. And that's why you've seen it come down as well so quickly. Like a few hours ago, it was 600. Now it's 117, right? They don't stay up persistently for that long, because volatility doesn't last that long, right? The dumps will happen very, very quickly. They're not going to just persist. Like, we're not just going to have ETH fall from 1,300 to 1,000 to 700 to 400, right, within a day. That's not how it works. So that means volatility goes down and gas fees go down with that. So yeah, just a bit of an explanation for you guys. So also over the weekend, I think it's less than this now, but Alexander Fisher here posted that the ETH2 deposit contract surpassed $3 billion worth of value locked, or 2.35 million Ether. Now, this is obviously worth less than $3 billion now. I think it is $2.7 billion at current prices. So, I mean, it's still close enough, right? I mean, it's still a huge milestone. 2.35 million ETH is about 2% of the total ETH supply. So yeah, it's really great to see that ETH is still flooding in. As the Ether price goes up, the more value is locked, the more value is being secured. I mean, I wrote a bit about this in the Daily Gwei newsletter today. But basically, you can think of the ETH2 network, since it's a separate network to ETH1 right now, as just another blockchain, right? And if you look at all the other layer 1 smart contract blockchains and measure them by market cap, pretty much all of them have a lower market cap than ETH2 does, except for Polkadot and Cardano. So you could just say that ETH2 is just like killing all these other kind of chains off, and it's just hilarious, because even if you subtract the 3 billion USD market cap that ETH2 has from the ETH1 market cap, ETH1's still way ahead of everything else. So yeah, it's funny to look at when you look at that and think about that, and I think it really shows the incredible strength of the Ethereum community here, that we've rallied around this and we've actually put in so much ETH into this. It's really great. I mean, I love looking at my validators and seeing them humming along. It's always really nice to see that. And I'm sure a lot of you have got validators as well, and you probably know the feeling I'm talking about. It just feels good, right? But yeah, I wrote a bit more about this in the Daily Gwei newsletter for today, so definitely go check that out. It's in the description. So Raphael from Glassnode tweeted out this picture today, and I've spoken about this before. Not today, sorry, yesterday, yesterday. So I've spoken about this before, but basically, Ethereum has flipped Bitcoin in total network fees paid in 2020. So basically, I think Ethereum doubled the amount of network fees paid in 2020 as opposed to Bitcoin. No, 83% more than Bitcoin, so almost double. So it was about $600 million in fees on Ethereum. And I've spoken about how Ethereum settled more value than Bitcoin in 2020 as well, settled about $1 trillion of value or something like that. So to see that it's also beating it in total fees paid is quite a nice sight, because you can see on the chart here that in 2017, or actually my camera's covering it, but basically you can see on the small chart, in 2016, Ethereum basically didn't even register, right? Bitcoin was quite small still in terms of fees paid, but Ethereum didn't even register. Then you look at 2017, Bitcoin has a huge lead. It was at like 550 million fees paid in 2017, whereas Ethereum was about 30-40 million here. Move on to 2018, obviously bear market, so the prices were down, which means that the USD value of the fees were down, but Bitcoin was still ahead. But now it wasn't ahead by that massive lead it had in 2017. It was only ahead by about double, I think. So if Ether had 150 million, Bitcoin had almost 300 million fees paid. Then 2019, obviously prices were lower again. It was the depths of the bear market, but Bitcoin actually got ahead at this point, because I think during 2019 it was actually quite a bad year for Ethereum and ETH in terms of sentiment and usage and all this sorts of stuff. But you can see here that Bitcoin was at 150 million fees paid. Ether was back to the 2017 levels, actually lower than the 2017 levels. But then you had 2020, which was obviously the explosion of DeFi and everything you can do with DeFi, and obviously the high gas fees on Ethereum. And you can see that Bitcoin basically, increased as well, but basically only did a bit more than the fees it did in 2018. Whereas Ethereum basically went from only doing 30 or 40 million fees in 2019 to, $600 million in fees in 2020. So a massive gain there. An obvious gain, like anyone who's used the Ethereum network knows how painful fees are, the high fees are. We've all paid them. I just spoke about the reasons why they're high. But yeah, this is insane. And the number one reason why this is insane to me is that Bitcoin's security long-term relies on network fees, because of the fact that the block rewards halves every 4 years. So as that block reward halves, the miners get less Bitcoin, and unless the Bitcoin price is going up, they're actually making less money. So obviously every 4 years now, the Bitcoin price has gone up, right? Or at least like after the halvening, the Bitcoin price has trended up. But that's only happened a few times. Like there isn't enough data to say this is going to happen into the future. And eventually Bitcoin is not going to go up enough to basically make up for the fact that the block subsidy is very small. And it's not going to take 100 years for it to get to this point. I think it can happen within the next 10, 20 years. So what that means is that Bitcoin needs to rely on network fees to secure itself, and I don't think long term it's going to be able to, because I don't think that there's enough demand just to move Bitcoin around on the Bitcoin network to pay all these fees. Whereas on Ethereum, right, you're not just moving ETH around, you're doing DeFi, you're moving stable coins, you're moving other tokens, you're doing NFTs, DAOs, whatever. You're doing so many different things, and people are willing to pay those things because those are high value transactions, especially DeFi. So Ethereum is actually beating Bitcoin at its own security game. And the funniest thing is that in ETH2, Ethereum doesn't need to rely on network fees for security because ETH2 has perpetual issuance to stakers, which is less than 1%, so very low perpetual issuance. And we will also have fee burning. So in turn, we may get to a point where ETH issuance goes negative because more fees is being burned than ETH generated a year per year, which creates this what I like to call symbiotic relationship. And this is actually, I guess, my bull case for Ethereum and ETH, is that I believe that this model for network security is better than this model of capped supply, halving every 4 years, and hoping that the fees paid on the network can actually make up for that dwindling block reward. So yeah, I mean, this is proving to be true, right? This isn't like a fantasy. This isn't a narrative. This isn't like fiction. This isn't like a prediction. This is actually happening right now. And I think that Bitcoin's hash rate and everything's at all-time high. Fair enough, right? But that's because the price is going up. I'm curious to see, when the price stops going up, or when it dampens at least, what's going to happen, right? Is the Bitcoin network going to become insecure? Is hash rate going to go down and perpetually go down because it just becomes unprofitable for miners to just live off transaction fees? And the block reward isn't sustainable because the price has stopped going up and it doesn't make up for the fact that the block reward halves every 4 years. So that's not FUD on Bitcoin or anything, but it is definitely something that not enough people talk about, and I actually consider to be a fundamental flaw in the Bitcoin protocol. Now, long term, and this might be an unpopular opinion, I actually think that the Bitcoin community will either vote to add perpetual issuance, which I know right now is very hard to believe because everyone rallies around the 21 million cap, and that's what gives it value and all this sort of stuff. But I think ETH has proved that, at this point at least, that you don't need a capped supply for something to have value, right? ETH has no capped supply and it never will. ETH will have infinite supply, but there's nuance to that, as I just explained. But at the same time, ETH is only, 1/6 of Bitcoin's market cap, right? That's huge. I think it's $120 billion. Bitcoin's like 700 billion or 650 billion or something like that. And it's living, and Bitcoin's obviously older, it's living off this kind of meme, whereas ETH has managed to attain this massive market cap, and it did it basically almost before ETH2 staking went live as well. So we only had ETH as, I guess people call it just gas, right? Or and then people were using it as a store of value. Obviously people were using it as gas because the fees being paid. So I think you don't need a capped supply, right? You just need demand. And that's what Ethereum has and what ETH has. It has so much demand. So yeah, I won't harp too much more on about this, but it's just another thing that Ethereum has flipped Bitcoin in, right? We flipped it in total settlement volume, flipped it in usage, in total usage across the board, whether that being DeFi or anything like that. I just think that the market cap flipping, I know it seems a little far away at this point, but I think it's just a matter of time. I get why people like Bitcoin and why people are bullish on it, but when you look at it and look at all the nuance behind Ethereum, what Ethereum's trying to do, and ETH as an asset, you just quickly realize, or at least I do, and a lot of my fellow perma ETH bulls do, that ETH is just such a magical asset, and it's just so different to Bitcoin and can stand on its own, that's what makes me the most bullish on it, basically. All right, last up here, we had an interesting tweet from Santiago from a couple days ago. So Santiago is a partner at Parify Capital, which is a very active DeFi investor and user. So what he tweeted out was, quote, "Was just on the phone with one of the largest global hedge funds. They've been interested in crypto for years but haven't allocated. The biggest surprise was hearing about DeFi protocols cranking out cash flow. With record low rates, DeFi productive assets become too hard to ignore, end quote. I thought this was awesome because this is exactly what I've been seeing as well with anyone that's in the traditional finance space, like my accountant, people that my parents know that I've spoken to and stuff like that. They all kind of think about the same thing. They're like, how are you getting 10% plus yield on your dollars, basically? And I'm like, well, there's this thing called DeFi. It's on Ethereum. It's outside of the banking system. And it's completely open to anyone to use. There's no KYC. You don't have to do any of that. And their minds are absolutely blown. Like, seriously, we take this stuff for granted because we're so in the weeds of this. But they are blown away by this, and not just because of the rates and the fact that you can buy tokens that give you cash flows as well, and do this all on DeFi outside of the traditional banking system. They're also surprised that they haven't heard about it. They're like, how have I not heard about this when it's just so amazing? I'm like, well, because we're so early. We're so early. You think about if you even look at the cumulative addresses, not people, addresses that have interacted with various DeFi protocols, it's like at 1.2 million or something like that. 1.2 million addresses. So I will tell you right now, there are pretty much so many people using multiple addresses that 1.2 million can easily be taken down to 500,000. And I would take that down even further to maybe 200,000 to 300,000 in terms of actual DeFi users, people that have used a DeFi app at least once, unique people, not multiple addresses or whatever. So when you think about that, 200,000 to 300,000 people, right? Now, the population of the planet is 7 billion or over 7 billion. I think it's approaching 8 billion at this point. And we have 200,000 to 300,000 using DeFi when the total addressable market of finance is the entire world, right? Like this is why people get so bullish on DeFi, on Ethereum, on all this sort of stuff, is because we have just not even begun to see the inflows of people that are going to be coming once they figure out how much better this system is. And obviously, there's lots of growing pains now, and I like to call us that are in the ecosystem today pioneers, because that's what we are. We are pioneering this technology. We are so early. We are the ones who will deal with the high gas fees and develop the technology and keep building and investing so that the people that come after us don't have to deal with that. And your reward for dealing with that is the fact that you get to buy stuff early. You get to buy tokens early before they go up. You had the opportunity to buy ETH, if it was 2016 at $10, if it was 2018 and 19, between $100 and $200. Those people coming in later aren't going to be given these opportunities because they are the late majority or the late stage adopters. We need them, obviously, to realize the goals that we have for this technology. But, that's why I always kind of, when I see people complaining about gas fees, I'm like, guys, like, you are at the forefront of this stuff. Enjoy it. Make the most of it while it lasts, because it's not going to last forever. These high rates aren't going to last forever. Things are going to get more efficient. Things are going to come down. The gains are going to come down. You're not going to be able to buy tokens of projects that are going to change the world at, less than $100 million market cap. These things are going to $100 billion plus market cap if they're successful. That's what fintech companies are at in the traditional world. So the crypto space loves to compare the market caps of crypto to itself, which is fair enough. That's relative valuations within its own asset class. But when you look outside and look at, the possibilities, to me, owning ETH is like owning a share of the internet, right? You can't own a share of the internet, so you buy the companies on top. Add all those companies together, right, in a kind of crude kind of way, and you maybe get the potential market cap for ETH, right? And that would be in the many trillions of dollars. And then you look at the apps themselves, right, and compare them to their traditional finance counterparts. We're replacing banks. Banks have market caps of hundreds of billions of dollars. We're replacing fintech. We're replacing payment apps. We're replacing all this sort of stuff, or at least trying to. And the upside there is just massive. Absolutely massive, especially because this is global. So I can't stress it enough about how early we are, even though it doesn't feel early to some of us because we've been here so long. We are so early. You'll know when we're no longer early when people aren't just talking to you about buying tokens on centralized exchanges and speculating and all that, but when they're actually using these apps in their everyday lives during bear markets. That's when you know that we are no longer early. So yeah, Really exciting stuff happening across the board. I will digress there because this has been a long Daily Gwei Refuel. But yeah, so thank you everyone for listening and watching. I hope you enjoyed it. Subscribe to the YouTube channel if you did. Give the video a thumbs up. Subscribe to the Daily Gwei newsletter. Join the Discord, and I will see you all tomorrow. Thanks everyone.